Arun is saying, I have never seen anybody speak about the logic as you say. I mean, if you're talking about the TPO size, then definitely I can also concur because there was no one. I was the first one to get into the problem, right? No one even thought of it as a problem. The reason is very simple. Jim Dalton, when he shared his profile charts, whatever platform he's using, if you zoom in or out, the TPO size changes. So the TPO size tries to maintain legibility depending on zoom. So let's say if I do this, now the TPOs are getting crushed. On that chart, the TPO size would change. I thought, why is that happening, right? Or what if we use similar logic and if we could keep the charts always looking similar? Okay, so if you go in the past, no matter how far back you go, okay, you will get a similar looking chart, because this particular TPO size is not dependent on what the market is doing right now. It is dependent on what the market was doing right then, and what changes with markets. Volatility is one factor. And sometimes what happens, people, what they do is, let's say if there is a very high price stock, they will use a high TPO size. But then the problem I faced was, let's say there are two stocks. Okay, one is a 10,000 stock, one is a 2,000 stock. Okay, this is the stock price. This moves 100 points in one day, and this moves 400 points in one day. If you set a high TPO size for this, you will only get a couple of TPOs if it just moves 100 points. And if you set a low TPO size, you will get this kind of a profile, because it will plot hundreds of TPOs, because the daily range is very high. So I said, do not look at the stock price. Let us look at the intraday volatility. So for a low volatility stock, you set a low number, so you get decent amount of TPOs. And for a high volatility stock, you select a high number, so again you get decent size of TPOs. So when you are changing stocks, changing instruments, you look at consistent charts. Then the poor highs, poor lows, failed options and all, they will work beautifully. Otherwise, there will always be ambiguity whether this is a failed option or not, whether this is a poor high or not. And when Jim Dalton was using S&P 500, its tick size is 0.25. And in those days, the S&P 500 was very low in value. So he was directly using tick size as the TPO. He did not have to change anything. Now if Nifty tick size becomes 1, then we'll have to change the ATR formula. If we cannot, I don't think we can use 1 rupee or 1 point as the TPO size, because the chart will become too crowded. But we can change the formula. We'll have to change the formula. He further says, as I know this logic, when ATR increases to a certain amount, I can make the change and have the standard chart for a long period of time. Yes, and the ATR is obviously, and it's not a 10-day or 1 day or 2 day ATR. It's a 100-day ATR. So if it is a 100-day ATR, what is going to happen? It is not going to change so frequent. If you look at this chart, and if you just scroll it back and you look at this lower number, you will see 160, 150, 140, okay, and again 130, again 140, 150. So when the volatility changes, it's not changing dramatically. So if you choose a very low number, let's say a 10-day ATR, the profiles will be all over the place. But the 100-day ATR keeps some sanity, and it keeps the charts consistent.